Hey guys, Adam Rose, Vice President, Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today's another episode of the Mortgage Guy Podcast. Today, we're going to discuss some changes to appraisal waivers and how often those might be coming through. Are they good? Are they bad? I don't know. I like them, but it might not be in the best interest of the consumer. And we're also going to touch on increases in mortgage fraud and why that might be, and how it relates to the migration crisis that we're kind of in right now. So let's get to it. So FHFA, so not FHA, okay? FHFA, that is the Federal Housing Finance Agency. So they regulate Fannie Mae, Freddie Mac, kind of make sure that their lending standards and practices are up to par, right? It's safe, it's sound. We're good, right? Well, I don't know if you ever heard of these. So in 2020, 2021, we got a lot of them. We still get them here and there. But something called appraisal waivers, okay? So in a nutshell, in lieu of getting an appraisal, whether you're buying or you're refinancing, depending on what your loan-to-value is, your credit score, there's a lot more to it than just what your loan LTV is, okay? There's more to it than that. They may waive your appraisal based off of data that Fannie or Freddie has, based off of comps in the market and data that we put into the system. So you may get a waiver on it. All right. So they announced an expansion on the eligibility for alternative appraisal methods or appraisal waivers on purchase loans by increasing the maximum LTV. So the maximum LTV right now is about 80% to get an appraisal waiver on a purchase, and they're changing it up to 90%. And from 80% to 97% for inspection, wolf, craziness. So on traditional financing, you might get appraisal waiver on a 10% down now, but they're also talking about appraisal waivers from 80 to 97% possibly for inspection-based appraisal waivers consistent with standard guide and eligibility guidelines. It's crazy. So it's very possible at a 97%, and you guys can correct me if I'm wrong, but at 97%, they're talking about possibly getting appraisal waivers on those, and I think that's a terrible idea personally. But some comments from the director of FHFA. To be clear, the expanded eligibility of appraisal waivers does not constitute an expansion of a credit box, which we know that, but rather it will allow more first-time home buyers, and particularly low and moderate income first-time home buyers, to recognize the benefit associated with appraisal waivers. So let's talk about that benefit, okay? So good things, right? Saves borrower money. So instead of charging this borrower $500 or whatever it is to get this appraisal moving, we're going to be able to put that back in their pocket. That's fantastic news. Love it. Improves closing time, right? I mean, if we get outside of this appraisal piece, I mean, and you have a clean file, I mean, you'll submit straight to underwriting, get your approval, finish off some conditions, close this puppy in 10 days. That's very, very possible. So that's another good thing. There's no chance of a value shortage, right? So if you're buying a house and you got it listed for $200, but you had some concerns about value, well, this takes this out of the equation. That's good for the lender. I don't have to deal with headaches. It's good for the realtor. They love it, right? Some buyers will love it because it saves them money and they don't have to worry about it. But the bad is there's a couple things that can happen here. The appraisal waiver is not guaranteed to stay, okay? A lot of lenders have run into this. If you follow some of the Mortgage Pub and some other Facebook groups and stuff like that, appraisal waivers come up all the time saying it kicked, okay? So what are we talking about here? Let's say I put in your file, I don't know, let's say you have 20% down, 800 credit score borrower, maybe you have, I don't know, 3 months of reserves or something like that, and all is fine and well, and your debt ratio is great, right? Maybe it's, I don't know, 35% or something like that. Well, I dig into your file, I submit it, right? We run your findings based off the data you provided me, approve eligible appraisal inspection waiver. Fantastic. I get your you go into contract. I get all your documents, and maybe the income's off, and your debt ratio goes to, I don't know, 43 or 44%, or maybe the reserves are off, right? Maybe you spent some of your money that you had, but you had expenses, and now you have 1 month or no months in reserves, right? That can change the findings. It's not just about the loan to value. Anybody that has 20% down, it's not an automatic you get an appraisal inspection waiver, right? So that can change, and sometimes it can change at the worst time. I've seen so many comments in those groups that says, hey, I had an appraisal inspection waiver. I am 4 days before closing. This got updated, and now it's gone. Well, guess what? Now you're getting appraisal done. So And sometimes even if you tweak it and make this file even stronger than what you originally ran it with, sometimes it does not come back. It's a very odd thing, and there's no rhyme or reason. There's no black and white answer on why it is. It just is, okay? And some people, I'm sure, with a lot of experience in getting a lot of appraisal inspection waivers that specialize in conventional financing might have some explanation on, well, if this changes, it kicks and won't come back. They may have some answers. I don't. I've seen it all over the map. No reason for us not to have one, and then I have other borrowers that get them, and I'm like, I have no idea why. And sometimes it's the property. Sometimes it's the borrower credit profile. There's a lot of stuff that goes into it. So that's a bad thing, right? That's one bad thing that I don't like about them is it could go away. So if you change anything in that file, you could screw yourself over, right? And delay closing. And piss off a lot of people. The other thing is, okay, so in this market, I mean, our prices are still pretty high, right? I mean, that's one thing that a lot of first-time buyers especially complain about is the price points of some of these houses and how it's went up so much since 2020. So do you want to put yourself in a position where you're not getting an appraisal and you could run the risk of overpaying for said property? That's another thing that a buyer needs to think about. Because the thing is once we order this appraisal, let's say you get an inspection waiver and we order the appraisal and you get it done because you just want to make yourself feel better about it. Well, once that gets logged, we got to use it, right? So once it goes in there and it gets uploaded, we got the SSRs from Fannie and Freddie. We're running with it. So that inspection waiver is null and void at that point. So, but it's something to consider, something to think about is, do you want to run that risk of possibly overpaying for the house? It's an additional protection for that consumer. But on a refi, I mean, fantastic. Let's get those all day long, right? You already live there. You want as much value in this home as possible. So we plug in a number, we get an inspection waiver, let's run with it, right? But on the purchase side, I'm a little bit more hesitant. And, you know, their talk of going to 90%, even possibly up to 97% loan to value is a little bit more scary because what's the position of the PMI companies, right? So if you did, I don't know, 10% down, and traditionally you're going to get PMI, which is risk-based pricing based off the property, where your LTV is, you know, your credit score, all this stuff that's going into this profile for your private mortgage insurance quote. What's their position if they don't have an appraisal to run with and they have an inspection waiver? I'm not real sure. I'd like to get an answer to that question, and maybe I'll reach out to a couple of my reps and see what their thoughts are on this and see where we go from there. So that's it on that. I want you to give you some thoughts. If we run across that, if you're a buyer in the market, you may want to think about an appraisal, even if you do get an inspection waiver. Just a heads up. All right. So you guys make the decision on that. Let me know your thoughts. If you think it's just nothing but good, or if it's bad. Right. It gets a little scary out there. So let's talk about mortgage fraud being up a little bit. So mortgage fraud risk is up 8.3% from last year. That's pretty big, right? Considering the amount of mortgage applications that go through all these lenders across the country every day. But New York and California and Florida led in fraud risk, with California seeing the highest increase of 14.6%. Identity fraud jumped 5.5% year over year, driven by the growth in ITIN loan programs. What is an ITIN, right? So it's an individual tax identification number, and they're loans for people who are not eligible for Social Security numbers. Well, first thing that comes to mind is, right, migrants coming into the country, right? People that aren't here legally, possibly. I'm not going to say that's everybody, right? But I'm just saying that is a big portion of this. And I've run into it personally as well, where we were trying to do a pre-approval, and they just didn't have a social. They had an ITIN, and I'm not a fan of these programs. I don't think there's a good place for them here. But again, that's one of the causes, right? There's a lot of people that might be giving some fraudulent information, which is increasing the fraud risk across the country. But on the ITIN, just to give you a little bit of data and information, so you don't have to have a Social Security number. You have an ITIN when you come into the country. There's some lenders out there. The down payment requirement is quite high. I mean, most of them are 30% down, okay? So it is a significant down payment, is a significant amount of skin in the game. So that helps alleviate some of the risk in regards to their ability to repay. So we've talked about non-QM lending. We've talked about subprime lending in the past. And some people talk about USDA being a subprime loan because it's 0% down, which is absurd. But ITINs, people are going to probably bring up, hey, this shouldn't be here, right? This is going back to the subprime days and scary risk, high risk loans to these borrowers. But the down payment piece, I think, kind of offsets some of that. And I'm kind of with you. I'm kind of not on this. I'm not a huge fan of these programs in general, mainly just because they only need a 2-year housing history that's in good shape. There's a lender out there that's really touting these, and they're talking about they just need a 2-year housing history, but they're mixing that with bank statement loans. That's scary, right? We got an ITIN, and then we're mixing that with bank statement loans, self-employed borrowers, right, where we're taking 12 months of bank statements and documenting their deposits and all this stuff. That's a little scary. But you can also do, obviously, W-2 borrowers, and they still have that ability to repay rule, right, the ATR. So, I mean, it's just one of those things that I'm just not a big fan of, but it seems to be one of the causes of the increase in mortgage fraud across the country. Let me know your thoughts. If you're a lender out there, you're watching this, if you do a lot of ITINs, let me know what you think, and we'll kind of go from there. I mean, there's other ones out there that require a 640 score. There's some that are 25% down. I've seen a couple that don't require a credit score. That's even scarier, right? No score borrowers, but then doing bank statement loans, but a little bit higher down payment. There's a big mix of them out there. That is not something we do here. We could broker them out. Again, I'm just not overly familiar with the programs, and not a huge fan of them. I don't think it's a good position to be in, personally. But hey, if someone wants a house and they have the ability to do it, bravo to them. So that's all I got for you guys this week. I hope that information was helpful. And remember to subscribe on YouTube. Check us out on Apple Podcasts and Spotify. I'll be on vacation next week when this puppy's airing. Catch you all the following week.